Welcome back. You're still watching Business AM. My name is Sambalaja Charles Kiage. Just before we went on break, we were talking about how the insurance premiums in the country have now shot up in Q2. And Reginald, my question to you was, how would this be the case when they have been complaining about how the coronavirus pandemic has really hit the sector? And they have experienced a lot of withdrawals and also policy surrenders in the economy.
So, Simba, if you look at general business, which mostly is things like property, motor vehicle, health.
Yes.
So, what might need to be analyzed is when do most policies fall due? When do most companies pay premiums for things like renewing motor insurance and renewing health insurance for the organization?
Yes.
Because what we need to put into context is that we have only 1.8 to 2 million people in the formal sector. And those people are on medical covers not because of choice, but because of the packages they get from their employers. And as Washington has said, motor vehicle is mandatory. If it was not mandatory, you'll be shocked the number of people that will drive without motor insurance, because most people feel like it's a pain to have motor insurance. We have 18 to 19 million people in the informal sector who most of them on average earn minimum wage. So even the penetration of the insurance in the country is not going to raising the incomes of the people in the informal sector, and the players in the insurance sector start considering that sector and coming up with micro products that are relevant to them. How does the Mamamboga secure or insure her mangoes and her oranges? And all that stuff, because that's where the people are. So if you continue coming up with products for rich people, unfortunately, that number of rich people does not even pass 1 million. So that penetration of insurance will not grow. You will get continually getting the medical that comes from corporates and get very few people that actually pay for their own medical. How do you come up with a micro medical product to cover people? So even as COVID came, the insurance companies all backed away from COVID. We're not going to cover COVID, we're not going to cover COVID. And then, so what's the point of having a medical cover if you're not going to cover it's a pandemic and it has to be treated. So we have a number of the industry, and we have a lot of greed and profiteering that comes before actually trying to grow and penetrate the industry.
Pretty much. Now, Washington, can you please clear for us the conversation this morning on this issue? Well, are you sort of hinting to a tighter space for this sector as the coronavirus pandemic exposed the weakness of this sector and what we expect to see post COVID-19 for the smaller insurance companies, which are you saying are struggling to even get the premiums out?
This one, 18 has to new ways of working, or even telephone services, about which is very, very rare in this country. I mean, you just book an appointment and then go for your face-to-face meeting. Well, going forward, of course, there's a lot that needs to be done. But like I said, Simba, what we need in this forum is this. We need to bring in the regulator in this forum. We need to bring in the head of insurance companies in Kenya, that is Association of Kenya Insurance. Bring in the CEO, the chairman. Let them answer some of these few questions and tell us what's the way forward. Because you see, there's a lot that is not happening in this country. There's a lot that should be happening, especially in the insurance industry. And we should understand that insurance is a bedrock of any economy. If you have a weak insurance regulation, if you don't have a strong insurance industry happening in the economy, then what is going to happen to the businessman? What is going to happen to us, we average people who have eked out our premiums for protection? People have been auctioned in this country because of failure of insurance companies to pay to come through for them during a claim. I mean, what's the purpose of insurance if really the obligations cannot be met? And we are basically talking about the increase in insurance premium. Like you said, increased insurance premium is not a sign of insurance growth. You'd be surprised, actually, the number of people who've actually, do we have any new people coming into insurance? Or is it the same old people who are actually increasing on the insurance? Because that's a question you should be asking. How many new people have come in and have acquired insurance covers? Of course, there are few people who have insured because most people have been laid off in their businesses. But the existing insurance players, the existing insurance consumers who are in the industry, they are those who have increased their cover, such that the premiums have gone up. But insurance penetration per se, as far as the population is concerned, it has actually gone down. Those are the things that we should be addressing. What is this that is making insurance not popular in this country? Because it is not, I can assure you of that.
Very much, gentlemen. If you may, let's move to the last issue that we have for you this morning, where Zambia is now on the brink of defaulting on its foreign debt after it missed a payment of more than $40 million. That's around 30 million pounds last month. Now, a so-called grace period, which expired Friday, will make it Africa's first country to default on sovereign debt since the coronavirus pandemic. Now, Zambia was already struggling with a 12 billion external debt load, but coronavirus has aggravated pre-existing financial pressures in the country. Now, the pandemic has put an additional burden on health services and depressed economic activity. Zambia has asked for a delay to interest payments until April next year, but creditors have not yet agreed. Now, the debt includes about $3 billion in bonds issued in Europe. Now, Sarah Jane Clifton, director of the UK Best Jubilee Debt Campaign, which is calling for debt relief for the world's poorest country, said creditors lent to Zambia at high interest rates, knowing the debt will probably become too great. Data from the Lusaka showed that Zambia's total debt stock stood at $4.8 billion, or 18% of gross domestic product by the end of 2014. Now, 5 years later, it had more than doubled to $11.2 billion, or 48% of its GDP. Now, the IMF predicts a rise to nearly 70% by year's end. Now, let's look at that data from Zambia this morning, and you can actually see, wow, how it has been growing despite us talking about this up to where they find themselves this morning. And then cross over and look at Kenya's external debt profile as well, which is also going to show you pretty much a similar pattern to what we're talking about in Zambia. Good. Now, Edward, I want to bring you in as well on this. And my only talking point will not be even about Zambia, because then I'll be asking you, Edward, is how did Zambia get itself here? And are we also headed that direction, Edward?
I think that's a good question. I think, first of all, you need to understand why Zambia, what are the sectors that promote Zambia? Basically mining and agriculture, and those are some of the sectors they rely on. And so what has happened in that country is, as much as they want to develop the economy into a place where they can be called a middle-sized economy, I think they went into a spree of borrowing, just like most other African countries have done, and especially borrowing from the East. And you know, most of the loans that that countries in Africa are getting from the East are not concessional loans, are actually development finance.
Yes.
And so with development finance, there's always an interest payment, as opposed to negotiating for concessional loans across the board. So I think that is where the problem starts. I mean, once your negotiators go into the international market to start negotiating for loans, they must be very clear on what kind of loans could be able to at least sustain the economy. If you go for commercial loans, then the area for you to be able to go. If you go for development finance, it's also a very risky area to go. But again, with concessional loans, there's the issue of conditionalities, that most of these givers of these loans always put certain conditions for you to be able to extend. And some of these institutions that give concessional loans are institutions like the IMF, World Bank, etc., multilateral organizations.
Yes.
But when you go for bonds, sovereign bonds, and so on and so forth, then there's always a risk for default, because at the end of that period that you're borrowing, the people that you have taken money from will always need their money back. And if you're not able to get revenues enough from your country's sector of exports, then it becomes a problem. So I think African negotiators should now start loans able to sustain their debt. Don't go for development finance. Don't go for commercial loans. Try and stick at that concessional loan level. So I think that's where the problem is. They went for concession, they went for commercial loans, and now they are stuck in repaying them.
All right, Reginald, let me also get you in on that. Just make anybody understand what happens to a country that fails to honor its debt repayments. What should we be talking about this morning?
Well, when you default on your debt, it makes the next time you're going to borrow, one, more expensive. Two, it might lock you out of certain debt markets because you become a bit risky.
Yes.
So there's those two elements that come when a country actually goes into default. Those are some of the consequences of going into default.
Yes.
But nonetheless, just to add to what Edward was saying, the main problem that Africa has, especially I'll use the example of Kenya since we are here. You borrow in dollars to go invest in projects that generate Kenya shillings. You do not have the ability to print the dollar. So when payments come, you need to have dollars. So if you go borrow in dollars and go invest in projects locally that do not boost your exports or boost your tourism, just like in Kenya right now, then you find yourself stuck in a situation. Kenya's debt, external debt to export is 256%. Yeah, as in literally we'll need 2.5 years of exports not touching them for us to be able to repay them.
Yes.
But it is key to note that our imports are 300 and something percent, 380% more than our exports. And that means we do not generate enough dollars to even import our own goods. What more of the dollars that are needed to pay off our debt?
Yes.
If you look at the reserve ratio to external debt, our reserves are only 26% of our debt. So if we take all our exports and our reserves, we are actually not able to pay off our debt. So African countries need to understand that there's something called a currency match. You borrow in the currency that you're going to get the revenue from, but then you don't borrow in dollars to come and build a railway to Mombasa, where the passengers are paying in Kenya shillings. So they're paying Kenya shillings, but where are you going to get the dollars to buy from? So most countries now, like Kenya, now end up getting engaged in currency manipulation to try and keep your currencies where they are stable, where they are. Because a depreciating currency also just increases your stock of external debt without even actually borrowing. So as much as we want to grow our economies, we need to move away from high capital intensive routes of growing and go to a low capital base of growing, where you do not need actually to go to the Eurobond market, but you grow using domestic debt. There's many times that we are compared to Japan, but I keep on telling people Japan's debt is majority in yen. It's in Japanese yen. It's not in US dollars. It's not in euros. So they're able to print. They will never default on their debt. They can just print with the effect of printing, definitely. But if we want to compare ourselves, say, oh, we're only at 70% or only at 80% of GDP, but of that 80%, 60% of it is external debt, and you don't have dollar revenues, then it's unfortunate to say, if Kenya is not able to borrow in dollars between now and June next year, the story will not be about Zambia, but the story will be about Kenya not being able to meet their.
Yes, Reginald, I'm going to come back to you on that because it's something that the UN put Kenya on the spot over, and they're coming to tell us exactly what that means. Because turns out we did not take up the G20 debt relief that was supposed to take during this COVID-19 period, which is supposed to release about $97 million back to the economy. Let me bring you in Washington. I mean, from where you sit, do you think that Kenya is headed the Zambian way? But remember, Ukuru Yatani has always said, look, we have never defaulted, and I don't see us defaulting anytime soon. But is the COVID-19 pandemic pushing us there?
Well, you can be double sure that's where we are headed as a country. Because you see, the biggest issue about the money that we borrow.
Yes.
Well, my two colleagues have talked about the issue of having an equal currency. But the issue of if you borrow in Kenyan shillings, if you borrow in dollars, pay back in dollars. You pay in Kenya shillings, pay back in Kenya shillings. Of course, it would make more sense if we did that in Kenya shillings, but who's gonna do that? Who's gonna give us in Kenya shillings in the first place? Now, the biggest problem now is about actually corruption. You see, the half of the money is borrowed and then it goes right into people's pockets. Money is borrowed, then it's like it has not been properly planned, so to speak. But I guess they have to give a plan of why they're borrowing. They've got to give, they've got to say, for example, that we're building this is the income that you expect back. Let me give an example of the SGR. You saw what happened. The government comes, it brings in the Chinese to build the SGR. But what happens? People are not interested in using the SGR. Why? Because the prices have been inflated. It's cheaper using the same road transport than using the SGR. So the government resorts to do what? Force people to use the SGR. Then people start protesting. You can't force us to do something more expensive, but the government needs to do that. Now, is the government really making the right policies in all this? You know, you get to wonder, who actually is this? Who are these people in the treasury? Who are these people managing the economy of this country to that extent? Because we don't seem to get value for our money. We seem to be moving round and round in circles. And to a certain extent, it's not even the kind of loan that you borrow. It's the fact that whatever you borrow, is it something that is sustained? Is this something that's going to sustain the economy? Is this something that is actually going to bring up what the initial intention was? Is it about bringing in more employment? Is it about making sure the infrastructure in this country is of quality enough to last for the next 10, 15 years? Or is it you build a road and the next year you start repairing it? There's all this issue of mismanagement of the monies. And I wish there would be more seriousness, for example, as getting that kind of people. Why can the government kill people who steal? You know, it doesn't matter, because it's actually a mockery of the whole thing. It's a mockery of, for example, right now in the COVID-19 era right now, the government is talking about borrowing more money to sustain the economy. 123 billion has been stolen. Is it that, I don't know, are we so stupid? Or what is exactly going on? There's some things actually that don't actually make sense. Because after the money is stolen, Simba, how do you then go and borrow some more?
Edward, let me bring you in on that as well, because this is exactly then how we bring this conversation closer. Because, well, if Zambia is going to be the first country that we're going to see sort of default on its loan repayments, and we have to talk about our country. Now, Edward, Mohesa Kitui put the country on the spot, a couple of days ago, for them not taking up a G20 debt relief that was being extended to some of the economies during the COVID-19 pandemic. Now, we did not take it because seemingly, because the condition would be that we were not going to borrow enough when we're still operating within that DSSI that we're getting given. Edward, is that not defaulting territory then? If we can't get relief because it's going to limit us borrowing so that we can settle our debt, are we not in the defaulting territory already?
The G20 was giving us money. It was a concessional grant or a grant, but probably it might have had more conditions, especially when it comes to issues of accountability and transparency of the way they are going to use those funds.
Yes.
And I think the G20 will give you, the G20 countries, whenever they negotiate a concessional or a concessional grant, there are certain things they lay out that, yes, we are going to give you money, but that money is not just given like that. That money comes with certain conditionalities of accountability, transparency, and how that money was used. And because Kenya, we have a reputational risk issue, as spoken by my earlier colleague who is in the insurance sector, I think when such a grant is given to a country that does not have good structures at the moment, then obviously there's going to be reputational risk.
Yes.
And that may make Kenya default other G20 loans in the future. So I think those skepticism and that risk averseness, and so they decided they must wait. Maybe that's not an emergency. Maybe they might want to engage the G20 at a further date where they may be able to get development finance or something that is extremely more crucial moving forward, and a lot of money. So I think that is something that I think that is why they refuse. But then to go to the issue that as default, we must understand that in Kenya we have market failure. We are not able to organize our markets so that demand and supply play so well because of other political risks that the country is experiencing. So one of the issues where African countries are defaulting is because we have market failures within our economies. We are not able to export. We are not able to, there's a mismatch between import and exports, and that must be addressed by government and must be addressed by the issue of currency devaluation, so that that currency risk is taken care of. So long as we'll continue having market failures in our economy, it will obvious, because what is market failure? Market failure means that business activity is extremely low. We encourage business because of the because of the enabling business environment. So businesses find hard to be able to participate in the production of goods and services because of certain market failures, like what my colleague is speaking about, the insurance sector. Maybe there's a lack of regulation that helps businesses to grow, or maybe there's lack of incentives that actually the government should be able to give people in any sector. For example, agriculture. There's a lot of mismatch. I mean, extension services does not exist. What we call incentives and subsidies for inputs does not exist. And that leads to market failure. So that even when these people are producing goods and services, there's a mismatch. They do not get the kind of assistance that they want to be produced. So long as the business environment continues to have certain failures, then obviously there's going to be a mismatch, and we are going to be in a debt situation, because government does not do business. It depends on businesses to be able to raise capital to enable it to start repaying some of their obligations.
Yes. Reginald, just clear for us this conversation this morning, because we only have 2 minutes on the clock. Yes, Muhisa Kitui did go on to say, I mean, us not taking that debt relief would not help us improve our debt profile because it's already deteriorating. I mean, was he sort of saying, wow, you guys know what you're doing, you're already on the default territory, that's why anything that tells you you can't borrow further within this period you're repaying us back, you're running away from it?
So Simba, it is important to note that when Kenya and African countries go borrow in the Eurobond market, number one, our debt is already one rating away from junk.
Yes.
So we are not borrowing high-grade bonds and whatever. We are already considered one rate away from junk, as in our risk. That's why we borrow at 9% and 16%, and European countries issue bonds at 0% and 0.5%. So when you are getting a Eurobond at 9%, and the European country is getting the same Eurobond at 0.5%, just tells you the amount of risk that you're already considered to have.
Yes.
So on the G20, Kenya had kind of this year covered. They borrowed from World Bank and IMF in the name of COVID, but that was just to show up reserves to be able to pay the interest payments that were due in August and September. Kenya will most probably go for this G20 relief when you come into 2021, because a huge chunk of external debt needs to be paid in that year. So it was an issue of timing. Two, the covenants that they have with the Eurobond holders and some of the commercial loans, because once you get debt relief, it is good that you're not able to. There are covenants in the Eurobond and in the commercial debts that will kick in, and where they have to open up their debt book, and we don't know some of those covenants, because Kenya is also very not transparent with the covenants they sign when they borrow. But the truth of the matter, Simba, is if we are not able to get another huge loan denominated in dollars, next year is going to be a very difficult year for the country, especially on the currency side, because our reserves are dwindling, and we are not generating enough exports. With the lockdown again in European countries, back down, the things that are earning as currencies are going to continue being hit until the end of the year. So we'll probably see the government going out to borrow. They will also borrow at a very high rate, or they will still go for the concessional or multilateral loans and just, and you know, with multilateral loans, our taxation is going to start going up because we need to prove that we can generate revenue to pay for our debt.
Pretty much. Reginald Washington and Edward Kusewa, thank you very much for making time of your busy schedules to talk to us this morning on our Economic Review. And that's exactly how we come to the end of Business AM today. My name is Simba Elijah Charles Kiage. Good morning.